Welcome back to the Deep Dive. You know, it's funny, we were just talking about how you used to be a Walgreens shopper through and through, but these days, it seems like CVS is your go-to,
Yeah.
especially for prescriptions.
It happens. Sometimes convenience wins out, or maybe your insurance changed. Or
Yeah.
perhaps CVS just has that je ne sais quoi.
Huh, maybe so. But this actually ties into why we're diving into CVS Health today.
Okay.
Remember how you used to own their stock
I did.
and told me you made a pretty sweet profit?
Yes.
Good times.
Until that peak.
Well, exactly. Now that the stock's down about 50% from those glory days,
Right.
you're thinking it might be a good time to buy back in.
Hmm.
So we've got a mountain of analyst reports and financial data here, ready to help us figure out if that's a brilliant move or a recipe for a disaster.
I love a good mystery. Let's see if we can solve this one together.
All right, so first things first.
Mm.
Even though you practically live at CVS these days, it's important to remember they're not just a corner drugstore anymore. This is a massive healthcare company with three main segments:
Okay.
healthcare benefits,
Mm-hmm.
pharmacy and consumer wellness,
Yep.
and health services.
Right. They've really broadened their scope.
Yeah,
When you think about it, filling prescriptions is just one small piece of the puzzle.
right.
Their healthcare benefits segment deals with insurance products.
Okay.
Health services includes things like pharmacy benefit management,
Mm-hmm.
pretty complex stuff.
Yeah.
And then, of course, there's the familiar retail side, the pharmacy and consumer wellness part we all know and love.
And don't forget, they even rebranded from CVS Caremark to CVS Health back in 2014
Oh, wow.
to show they were serious about this whole healthcare giant thing.
Interesting.
By the way, they have something like 300,000 employees.
Oh, wow.
That's a lot of name tags.
To put it mildly, their reach is enormous.
Yeah.
Now let's get down to brass tacks. How's their financial health looking these days?
Well, their revenue growth has been pretty impressive,
Okay.
even with the economy being a bit wobbly lately. In 2021, they brought in $290.91 billion.
Okay.
Then jumped to $321.63 billion in 2022.
Wow.
And projections show them hitting $356.62 billion by the end of 2023.
So
So on the surface, things seem pretty rosy.
definitely strong top-line growth, but revenue is only part of the story, right?
Yeah.
What about their profitability? Are they actually making money?
That's where things get a little more complicated.
Oh,
Their net income actually plummeted by a whopping 41% last year.
ouch.
Ouch.
That's a significant drop.
Yeah.
It makes you wonder what's going on behind the scenes.
Right.
While we don't have their internal memos, the financial reports do hint at some possible culprits.
Okay.
It looks like they got hit with some hefty legal settlements,
Mm-hmm.
almost $5.8 billion worth in 2022 alone.
Wow.
And there's a good chance those merger and restructuring costs from recent years are still lingering.
Okay, so those kinds of one-time expenses can definitely throw a wrench in things,
Yeah.
even if the core business is doing well.
Right.
But how does all of this translate to their valuation? You know, the whole, is this stock a good buy question we're trying to answer.
Right. Let's look at some key metrics.
Okay.
Currently, CVS is sitting at a PE ratio of 14.08.
Okay.
But for context, it was around 12.18 in 2022 and way up at 28.40 back in 2021.
Wow.
That tells us the market's perception of their future earnings potential has changed quite a bit over the years.
And what about that dividend yield?
Yeah,
You mentioned it was pretty tempting back when you owned the stock.
it was.
Has it changed much?
Oh, it's definitely gotten juicier. They're currently offering a 4.78% yield.
Wow.
That's a sizable jump from 3.23% in 2022 and 2.57% in 2021.
Okay.
So for someone looking for a steady income stream from their investments,
Yeah.
CVS is looking pretty attractive on that front.
I bet that catches your eye,
It does.
especially since you're thinking about diving back in.
It's certainly something to consider.
Right.
But before we jump to conclusions, let's see what the experts are saying about CVS's future. We've got some predictions to unpack. It seems like the analysts are feeling pretty optimistic about CVS,
Really?
which is interesting considering those financial bumps we just discussed.
Yeah.
Overall, 16 analysts have given it a buy rating.
16. So they're not just a little bit bullish, they're practically charging ahead.
Right.
What are they seeing that we're not?
Well, their price targets for a year from now range from a low of $58
Right.
to a high of $86.
Wow.
with the average landing around $68.63.
Hold on. So that's potentially a 23% gain from where the stock is now.
It is.
That's starting to sound pretty tempting.
It does make you think, but remember, those are just predictions.
Right.
It's essential to understand why they're so optimistic.
Exactly. Let's not get ahead of ourselves.
Yeah.
What's fueling this bullishness? Is it just the dividend yield, or is there something more to the story?
It's a combination of factors, actually.
Okay.
Remember that revenue growth we talked about?
Yeah.
That's definitely a big plus in their favor. Plus, their push into primary care services seems to be catching the analysts' attention.
Interesting.
They think this could be a real game changer for CVS.
You know, it's funny. When I think of CVS, I still picture those aisles of greeting cards and seasonal candy.
Yeah.
It's hard to wrap my head around them becoming a major player in primary care.
I know what you mean. But they're not just dipping their toes in the water.
Right.
They're going all in. Remember their acquisition of Oak Street Health?
Mm-hmm.
That network of primary care centers?
Yeah.
That's a huge statement.
Yeah.
It shows they're serious about integrating primary care into their overall strategy.
Wow. I hadn't thought about it like that. It's almost like they're trying to become the one-stop shop for all your health needs.
Exactly.
Get your flu shot chat, pick up your prescription, and chat with your doctor all under one roof.
The analysts seem to believe that this move will not only increase revenue, but also help CVS control healthcare costs
Right.
and improve patient outcomes.
That makes sense.
And when you factor in their investments in things like telehealth and personalized health apps, well, it paints a pretty compelling picture of a company that's thinking long-term.
Okay, I'm starting to see the appeal here. Steady revenue growth, a juicy dividend yield, and a strategic vision for the future. No wonder those analysts are excited.
Right.
But what about the risks? Every investment has those right.
Absolutely.
We can't ignore the elephant in the room, that 41% drop in net income last year.
You're right. We can't get carried away by the hype. There are always risks to consider.
Yeah.
For starters, the healthcare industry is heavily regulated. Changes in government policies could have a big impact on CVS's business.
Okay.
And then there's always the possibility of more legal issues popping up. You never know what might be lurking around the corner.
It's true. Those legal settlements hit them hard.
They did.
And even if things calm down on that front, competition is fierce in the healthcare world.
Oh.
You've got Walgreens, of course, plus a whole swarm of online pharmacies and new healthcare startups trying to disrupt the industry.
That's true.
And let's not forget the economy.
Yeah.
A recession could put a real dent in consumer spending, including healthcare.
For sure.
That would definitely affect CVS's bottom line.
It would.
Right? It's a balancing act. We've got those positive factors working in CVS's favor.
Yep.
But there are some potential pitfalls, too.
Exactly. You've got to weigh the potential rewards against the risks. But there's one more crucial aspect we haven't touched on yet.
What's that?
CVS's future growth prospects.
Okay, let's talk about growth.
Yeah.
We've talked about the potential of their primary care strategy, but what are the numbers saying?
Well, here's where things get really interesting. While analysts are bullish on CVS's long-term prospects, their short-term forecasts are a bit more complex.
Right.
They actually predict a dip in earnings per share, EPS, this year, from $6.47 in 2023 to $5.23 in 2024.
Wait a dip. But I thought we were talking about growth and all these amazing strategic moves.
Right.
What's behind that prediction?
It's not entirely clear, but remember, those legal issues and restructuring costs,
Yeah.
those are probably still weighing on their earnings in the short term.
Ah, so those one-time hits are still lingering.
Yeah.
It's kind of like a hangover from a wild night out.
Yeah.
You eventually recover, but it takes time.
That's a great analogy. But here's the thing. After that predicted dip, the analysts expect EPS to rebound in 2025, reaching $6.03.
So a dip followed by a rebound. Sounds like a roller coaster ride.
It does, doesn't it? But here's the takeaway. Even with that short-term dip, the long-term growth story remains intact.
Okay.
Those analysts are still betting on CVS's ability to execute its strategy and come out on top.
Okay, so there's a lot to unpack here.
There is.
CVS has solid revenue growth, a growing dividend, and a bold vision for the future. But they've also got some challenges to overcome both in the short term and the long term.
Right.
It's enough to make your head spin.
You're telling me.
Yep.
So how do we cut through the noise and figure out if CVS is a good buy for you?
Yep.
Knowing your history with the stock and your overall investment goals, let's explore that in our next segment.
All right, so we've covered a lot of ground here. Revenue growth, dividends, primary care, legal battles, economic jitters.
Yeah.
It's a lot to digest. But let's bring it back to you.
Okay.
Remember, you're the one considering buying back into CVS.
Right.
Does everything we've talked about change your perspective at all?
Well, it certainly adds some layers to the decision, doesn't it? We've seen that CVS is a company in transition.
Yeah.
Not just your grandma's pharmacy anymore. They're trying to position themselves as a comprehensive healthcare provider
Right.
for the 21st century.
Yeah.
And that comes with both opportunities and challenges.
Right. They're not just riding the wave. They're trying to create their own wave,
Exactly.
which is exciting, but also a bit risky, especially in a field as complex as healthcare.
Exactly. So let's break it down in terms of your specific situation.
Okay.
You mentioned you previously owned CVS stock and made a decent profit.
I-
That suggests you have some level of confidence in their ability to deliver value to shareholders.
True. I did believe in them back then,
Mm-hmm.
and that dividend was definitely a nice bonus.
Yeah.
But things have changed since then,
Right.
both for the company and for me.
That's important to acknowledge. Your
Yeah.
investment goals and risk tolerance might be different now.
Yeah.
So here's a way to frame your decision.
Okay.
Think about what initially attracted you to CVS as an investment.
Okay.
Was it their strong brand recognition, their
Mhm.
consistent dividend payouts, or maybe their potential for growth in the healthcare market?
Good point. Back then, I think it was a combination of their solid reputation
Okay.
and the fact that everyone knows and uses CVS.
Mm-hmm.
Seemed like a safe bet.
And how do those factors resonate with you now? Do you
Oh.
still see those strengths as relevant?
Honestly, yeah, I do. They're still a household name,
Yeah.
and people rely on them for essential healthcare products and services.
Okay, so that fundamental appeal is still there. Now let's layer in what we've learned about their recent performance and future plans.
Okay.
We've seen that they're facing some short-term headwinds with those legal issues and restructuring costs.
Right.
But their revenue is growing, the dividend is attractive, and their move into primary care could be a game changer.
Okay. Starting to feel like I'm back in business school. But yes, I'm seeing both sides of the coin now. It's not a simple yes or no decision.
It rarely is with investing.
Right.
Here's the key question to ask yourself.
Okay.
Do you believe in CVS's long-term vision? Do you think they can successfully navigate the challenges, capitalize on the opportunities,
Right.
and ultimately deliver value to shareholders over the next 5, 10, or even 20 years?
That's a big question. And I think the answer is, I'm not sure yet. I need to think about it some more.
That's perfectly fine. There's no need to rush into a decision. Remember, investing is a marathon, not a sprint.
True. True.
Yeah.
But what you've given me today is a much clearer roadmap for how to think about CVS, both as a company and as a potential investment.
Mm.
It's not just about those flashy headlines or stock price movements. It's about understanding the underlying story and deciding if it aligns with my own goals.
Exactly. And that's what the deep dive is all about.
Yeah.
Empowering you with the knowledge and insights to make informed decisions.
Well, mission accomplished. I feel much more equipped to tackle this decision now.
Great. Remember, it's your money, your investment, and your future. Take your time, do your research, and choose what feels right for you.
Thanks so much for all the insights today. This has been incredibly helpful.
You're very welcome.
That's all from us, and we really hope that you stayed until the end. Please help to like and subscribe and also leave a comment.